And at the end of the day, we're number one in index universal life sales. If you Google it every quarter, every year, we are the number one company with IULs. And it's because of the full value proposition. I want to talk about the company for a second before I get into a bunch of things because it matters at the end of the day. National Life Group has been around since 1848. That's 175 years of history. Last year, Disney celebrated 100 years of history. We celebrated 175 shortly after them. So shows that we've been around for a while. In the middle of COVID, we increased our non-med underwriting from $2 million to $3 million in the middle of a pandemic, where other carriers were kind of going in the other direction. And at the end of the day, we're number one in index universal life sales. If you Google it every quarter, every year, we are the number one company with IULs. And it's because of the full value proposition. Whenever I talk about our IULs as a company, I usually tell this story. So last year I was having dinner with one of our big agency heads, and he sat down at dinner and he said that I can't stand how every time I illustrate a National Life Group illustration, it's an uphill battle. There's like 4 or 5 of your competitors that illustrate a lot higher than you. But he followed up that by saying, I love to never have to go back to a disappointed client. And what that story means is National Life Group, even though we're number one in IULs, there's about 4+ carriers that illustrate higher than us. But what good is an illustration if that's not actually going to perform? Being a 100% mutual company, that means that the policyholders are the owners of our company. We have great ratings. We have a great Comdex score. Companies can touch the cost of insurance after policies are issued, and they can also lower their caps. So if you see a high cap and great expenses, great costs inside of a policy, you're really trusting that that company isn't going to change anything after issue, which they do all the time. We've never increased cost of insurance on our existing books of business, so we really under promise and over deliver. I'll get into the illustration system and just show you guys how I would design a lot of our cases. But before I do that, I want to talk about our company as far as underwriting and how to best operate with us. Because I hear the stories about sometimes policies can sit there and wait and not issue. And submission to commission is really a big part for you guys because you guys buy leads, and the more money in your pocket, the more families that you guys can help, right? But how we operate as a company is extremely important to know. Otherwise, you're in the dark with a lot of stuff. I won't dig in too heavily into all these, but we do have all the living benefits on all our policies in all 50 states. Last year, we paid out $98 million in just living benefit claims, which is a great story to tell. This kind of puts us against the competition. So for those of you that might be not as familiar with living benefits, it's just life insurance that you don't have to die to use. So your cancers, your heart attack, your strokes, all those things that happen to everyday people, we're able to pay out the death benefit while you're still alive. For those companies that say that they have living benefits, this compares us to the rest of them. And you'll never hear me talk bad about another carrier. We all have our specific advantages, right? But when it comes to our IULs and our living benefits, we truly can't be beat. I'm going to open it up for questions really quick because whenever I do my trainings, I like it to be a conversation, not a presentation.
Yeah.
But I do want to hold this up in front of you, and this is our non-med guidelines. But if there's any questions, please write in the chat box or speak up.
Yeah, if you guys can put them in the Q&A, we can start with those. So we hear that a lot, Devin. I think, some companies say they illustrate it, 9%, 8.5%. And I mean, I always tell clients like, hey, we're going to be in that 6 to 8% range. If we can get over 8 and get into the 8s and the 9s, like I'm totally cool with that, but I don't want to be the guy that's over promising. And then, in 20 years, you look back and you're like, that policy wasn't what I expected.
Absolutely. That's the worst thing that can happen. What good is showing a client an illustration when 20, 30 years from now, it's not going to perform, and that's from the time that they needed it most. And we even publish our historical interest rates inside of our website, shows we have nothing to hide, and you can even fact check us and notice that we don't drop rates because we can promise you a really high cap year one, but then we could switch it down the road. I will take any underwriting questions that you guys have. If there's one slide I would want you guys to have is this one. These are our non-med guidelines. So we go up to $3 million and your policy could potentially instantly approve up to age 40. Keep in mind, this is not a simplified or guaranteed issue. It's still a fully underwritten program. That's why our application's a little bit longer, but I've seen commissions in the 60 to $70,000 range where we instantly approve policies, meaning it never touches an underwriter. I'm going to show you guys how to get more instant approvals because how you fill out the application is everything. That's actually the conversations I have the most with Family First Life agents is how to get more instant approvals. But any questions on underwriting before I dig in, you guys can drop them in the chat box. To get the gears turning, you don't need a social security number with us. You can have a tax identification number to get a life insurance policy with National Life Group. After age 20 of diagnosed with diabetes, you're insurable with us if that's the only kind of parameter. But I'm just saying that because we are very flexible and lenient on the underwriting. But any questions on that before I move into how to fill out those applications?
Is that diabetes? Is that with insulin or is that pills? Or does it
It
matter?
honestly doesn't matter as long as it's well controlled. It's actually the longer you've had, I shouldn't say that. As long as it's been well controlled for a decent period of time, it really doesn't really harm you that much at the end of the day.
Okay. And Devin, this IUL product, obviously the NL one, that's just for the state of New York. We try to kind of stay away from that. LSW is going to be for all the rest of the states.
Correct. That's correct. Yes, yes, yes. Please spread that message.
Okay. And then the ages for approval are basically 18 to 65, or does it go higher than 65?
Nope. 66 and older, you will always need a paramed.
Okay. And what's the oldest someone can get approved? Is it 75?
85.
85. Nice.
Yep. Yep.
Okay.
Term is up to age 75. IUL is up to age term is to 75, IUL is to 85.
Got it.
Yep. Okay, no underwriting questions by the sounds of it. Now, I want to talk about our EAP for a second because there is two parts to this. You'll notice that in the screen, there's no banking information, no health questions, nothing, right? So when it comes to our EAP, there are two parts, and this is why we actually start underwriting as your client's filling out the application. So they sign off on HIPAA, they give us permission in that first part, everything. There's two ways to sign our application. There's face-to-face and there's email. Technically, if the client isn't in front of you, you'd have to click email. However, during COVID, we got very creative. In the virtual environment that we were in, we were technically considering a video call as face-to-face. Don't ever just do a phone call with the client and say you did a phone call. Make sure you're doing a video call with them. You can technically click face-to-face even though you're not in front of the client. And the keyword there is technically. I'll walk you through what happens when you click one button or the other. If you click face-to-face and you sign that way, it will automatically open up the second part of the application. If you click email, you cannot do anything. The application locks and you can't do anything until the client signs off in their email. So it does delay the process a little bit. Half the time the email goes to their junk. So I would get into the habit of clicking face-to-face as much as you're able to do.
Awesome.
Okay. Let's talk about this now. So this is why policies don't instantly approve when they should. I actually had our marketing team send out a blast email to you guys today, and this is what was inside of that email. Two very important things. And again, what I'm about to talk to you guys about is the difference maker of it physically touching an underwriter and having them review the policy and speak with you, or having it instantly approve and never touch an underwriter and go to the case manager for issue. 40% of our policies, 40, instantly approve at the company. If you're saying there's no way that's possible, this is exactly why. This is why policies don't instantly approve when they should. So even though your client can be healthy or whatever the case may be, how you fill out the electronic application is everything. So first and foremost, don't type in the agent remarks section. You'll see a white box where you can miscellaneously type in anything. Don't type in that box. If you literally put thank you, it would have to touch a physical person to review. And the other thing is don't include attachments, even illustrations. You can go from our illustration system into the EAP, which you should do every time because it saves you about 10 to 15 minutes in that process. So don't include attachments and don't write in the agent notes. Those are two big ones. Here's the other reasons. Don't free-form type medications. So if your clients take, let's just say Advil for simplicity's sake, don't type ADVIL and move on. Type ADVI, and when you see the drop-down filter, physically click the word. If you're not physically clicking the drop downs, the system thinks that you're hiding it from the system. The other thing is primary care physician. Unless you're a child or you're older than 60, National Life Group doesn't care if you're seeing your doctor unless you have health issues. I'm going to say that again. Older than 60 and being a child, you do need routine medical care. But if you're under those ages, below those ages, then you don't need to have a primary care physician, but you need to put something in the EAP. 100% of the time, when you fill out the EAPs, you should be putting in a primary care physician. If you have to go a last resort, put the primary or the urgent care doctor down the road or anything along those lines, but always include the doctor. And lastly, for juveniles, do not eyeball their height and weight. If you're sitting with the mom and she says, yeah, my child's about 50 pounds and 70 inches, be accurate to the pound and to the inch, because whenever child policies are held up in underwriting, 95+% of the time, in my experience from what I'm seeing, is because the height and weight were eyeballed. So make sure you're accurate with those. If you do this and this slide and implement it in your applications with us, you will see instant approvals at least 40% of the time. I'm going to pause there and see if there's any questions. You can throw them in the chat box, and then I'm going to get into the illustration system.
Awesome. I didn't even realize a lot of that stuff. I know at convention, Devin, we talked about how sometimes agents will just go through the medical questions, and if it's like a kind of or like not really, it's always like no, 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 no. But what you're saying is with your guys' system, it's better to err on the side of the caution and click yes than trying to hide it, because then the system will just try to decline it.
Hayden, exactly, man. So I just have to kind of be direct with this statement. Our underwriting is getting clogged up and our turnaround times, we're trying to get back to normal, which we are. We have made strides of improvement, but agents are just saying no on all the medical questions, and that clogs up our turnaround times and our underwriting. I have to say this, it works in your favor, excuse me, to disclose the information. So if you think that your client took a medication or they think they did, probe a little bit more. If they said, oh yeah, I did take a med 2 years ago, but I don't take it anymore, disclose it anyways and say that. There's nothing more that an underwriter hates than surprises. It works in your favor to disclose things. So if I'm an agent, let's say I went out into the field right now and started selling full-time with you all. Knowing what I know now in my 10 years at this company, if I filled out the medical questionnaires and every single question was no, before I even submit that application, I'm going to ask the client, are you sure there's no meds, there's no speeding tickets, you didn't have any hospital visits in the past 5 years, you didn't apply to another insurance carrier, anything along those lines? I'm asking before I submit that application. And one of my favorite phrases, buyers are liars. It's the truth, but at the same time, people can forget things as well. So take your time on those applications, because the motto is slow is smooth and smooth is fast. So I will say, Ileana, apologies. I have not come across a medication that's not in our system, but there is an other section where you can add that in. So I have not come across that yet, but you will be able to just free form type a med. And in that case, you would have to type it all out and not click the drop down. Okay, please make sure that you have the smartphone application downloaded. I'm going to talk with you guys about how to communicate with our company. National Life Group operates very, very uniquely, okay? You don't want to call our call center and say, hey, can you give me a status update on this policy? Or, hey, this has been sitting a while. Can you push it through an underwriting for me? We hired a lot of different people across the country and even overseas to help with our call center. That's also to say, they're doing a lot of calls for different reasons. You can definitely call them and have access to them, but it won't do you any good to get business pushed through by calling and asking for things to be reviewed. Here's why. We have a platform now where one database is seen by everybody. So you don't email anymore. You don't have to worry about sending something to the case manager and the underwriter. When you're staying within the portal on your smartphone or in the website, you don't have to worry about different people not having their eyes on it. If things are really, really just unbearable and you're feeling that the wait times are way too long, you can escalate it to Hayden, and Hayden has my information. I have different levers that I can pull with our underwriting team. But if a policy doesn't instantly approve, it usually takes about 4 or 5 business days to be reviewed. Just because it didn't instantly approve does not mean that we need blood or urine. 96% of the time, we actually don't ask for blood and urine, or we don't issue business requiring blood and urine. And that's one of the statistics that was earlier in my presentation. We don't like having to get blood and urine as a company because it's invasive, it takes a lot of time, and quite honestly, it costs a lot of money. If a policy doesn't instantly approve and you're within those easy underwriting guidelines, we just might need to ask you a clarifying question. The most common question right now that agents aren't disclosing is insurance activity with another carrier. And I had this happen a couple of weeks ago. An agent submitted an application. The underwriter said, hey, your client applied with another company last year. What was the status on that? The agent got very defensive and they said, this is ridiculous. My client's really healthy. This policy should be issued. They applied for a policy with company XYZ. They didn't accept it. The doctor they just visited their doctor yesterday at the hospital, and the doctor said they're very healthy. The agent then opened up a can of worms with that underwriter and said, look, we could have issued this policy just by saying the client didn't want that insurance policy with the other carrier. You didn't disclose they were in the hospital. So why were they in the hospital? Why did they see their doctor? I say that to say, treat this kind of like you're on trial. So you definitely want to be as honest as possible, but underwriting is also on a need to know basis, right? So be brief, be professional, be kind whenever you're working with them. At the same time, just answer what they're asking and nothing more. Because if that agent said they applied for insurance activity with another carrier and they no longer want it, we would have issued that policy. But by them saying the client was in the hospital and their doctor said they were healthy, we then had to probe, and underwriting had to do their due diligence. So just a little bit of a few stories to help you guys with your business, but definitely have the smartphone application. Try not to call in because it doesn't do any good. Message in the portal. And again, if you're just pulling your hair out of your head and thinking this wait time is just not acceptable, you can escalate to Hayden, and Hayden has my my 911 number. So before I get into the illustration system, questions on living benefits, questions on underwriting, anything at all. And I can talk about the payment sections in the application as well if you guys don't have anything else.
Someone texted me, Devin, with the application, like on your phone, can you do actual e-apps and illustrations or just desktop?
I'm going to tell you no. People have had success with iPads and people have had no luck with iPads. On your phone, no. Desktop is definitely the way to go.
Okay. And one more piece I'll add to that, guys. It seems like Safari does not work very well with their e-app, so I would advise you use like Firefox or Chrome.
Yep. And vice versa. If you're not having luck with one, use the other. I will tell you, iPipeline is the company that we use. So oftentimes that first part of the application will lock and freeze up. People call us and ask us if we can help. This is the comparison I use. If you have your iPhone and you don't have any service, you're probably not going to call Apple and say, hey, why is my Verizon service not working? You're going to go to Verizon, right? Whenever there's issues with the e-app, it's not an NLG thing, it's an iPipeline. It's very, very seldom that it happens, but if you're stuck or there's a bug or something's not working, you'd actually want to go to iPipeline to fix that issue for you. So just something to keep in mind. The other thing I want to talk about is choosing draft dates in the application. And what I'm about to tell you is the difference maker of you guys getting paid quickly, or you guys taking a month plus to get paid. So today is the 30th, right? A lot of agents think, oh, I'm going to choose the 1st or the 2nd for my client of the month for payment because that's just a few days away. I would not do that. If you choose a day and we're past that day, the policy can't draft until the following month. So for example, if I were to choose the 1st right now of draft initial premium for my client and the policy doesn't issue until next week, the absolute soonest we will draft is June 1st. So don't choose draft dates on the application. Choose draft next available. Just make sure that the client will know that the payment will come out, or you can choose draft on agent instructions. When you choose draft on agent instructions, we will draft whenever you want us to after the policy has been approved. So I would do one of the two. Choose draft next available. That's ideal because once a payment's drafted, you guys get commission, or just choose draft on agent instructions. Do not choose draft dates because that will create a mess. Sheila, thanks for dropping iPipeline's number in the chat box. Okay, so let's get right into the illustration system because I'm going to unpack a lot. And if there's one thing that I would train somebody or try to introduce them to as far as selling our company, I would just need to use the illustration system. So I'm going to share my screen, NLG, share, and we're good to go. Hayden, you see my illustration system, correct?
Yep.
Awesome. All right. So as we said earlier, always do LSW. Don't do NL unless you're in New York. I'm going to choose our Flex Life. We do have two IUL products. Our Summit Life is $1 million minimum in death benefit. It's higher target commission and higher cash value. So if you ever have clients that have $1 million death benefit or higher, make sure you're using the Summit Life because it's better for both commission and the cash value, which is very rare. But let's go ahead and create an illustration, okay? So we'll just do, we'll do Taylor Swift. We'll make her a female. We'll make her 35. And then we'll just leave her at standard. So agents think if I quote preferred or elite, that's going to get my chance of them getting that rate class even higher. Couldn't be further from the truth. Choose standard non-tobacco. And if your clients qualify for preferred or elite, we will give it to them. It's better to go back with good news instead of bad news. Quite honestly, it doesn't matter what you quote. We will give them the rate class that best suits them. So I'm going to go into death benefit and funding, and I'm going to show you guys how I would design 70+% of illustrations. I'm going to show you how easy and simple it is, and then I'll unpack level versus increasing. I'm sure there's different opinions and everything about that. I'm a fan of level unless you're a child. And again, generally speaking, there's not one best solve. Otherwise, there would just be one option, right? I'm going to leave it as level, and I'll show you guys why I recommend level. So I'm going to choose minimum death benefit max cash value. You guys are pros on this call. Pretty straightforward. It's a scale, right? I have death benefit and I have cash value. The less death benefit I have, the more cash value I'm going to receive. I'm going to change my premium mode from annual to monthly because that's how Miss Taylor Swift wants to pay her bills. And let's have her pay $300 a month. For those of you that want to show income, you can, but you definitely don't have to. So if you wanted to show income, you would just do 1-A65. So notice that I did A, the A represents age instead of 65 years from today. Whenever you show income, choose solve for income. We actually have a guaranteed income rider on our IUL. Very, very, very rare in our industry. I only know of 2 carriers that have it. It's extremely common in the annuity space, but it's not as common in the IUL space. The income rider guarantees you a tax-free stream of income for as long as you live, and it guarantees that the policy will never lapse. It doesn't matter how long you've had your policy. It's automatically on the policy, so the client doesn't need to decide this right now. I'm a fan of choosing solve for income because it illustrates the highest, simply put. What I just did is how I would design 70% of my illustrations. What I'm going to do, I'm going to go to the quick view screen. I'm going to leave this open for questions, and you guys can ask me anything that you want. So in this case, Taylor gets a $260,000 death benefit. Her income every year is 25 grand, and life is good. So I'm going to leave this up for a second, and I'm next going to unpack increasing versus level.
Hey, Devin, if we do, instead of monthly premium, if we find people that want to pay like semi-annual, or let's just use annual for example, how does that differ in terms of us getting paid? For if we do annual, are we getting paid the whole thing, or how does that work?
Good question. Yeah. So keep in mind, this is a general answer, right? So paying $3,600 a year is different than paying $300,000 a year for large cases. But yeah, so you guys have a cap whenever you're paying monthly. But if the client's paying the annual premium, you would get your commission off of that annual premium. So the cap how do I say this? The cap doesn't come into play when you're paying annually, if that makes sense.
Okay. And the reason's because they can't charge back after the 30-day free look.
Not necessarily. I mean, yeah, that, but also we as a company receive the full premium. We're more than okay paying your target premium. So if you give us $3,600, we're more than fine giving you $2,274. If you only give us $300, we need to give you a cap because we haven't received anywhere near the target premium yet.
Got it. Okay.
So both reasons, quite honestly.
And guys, we've found that these kind of clients that want to pay a couple $100, $1,000, couple $1,000 a month, most of them have money and they'd rather just pay 1 or 2 bills a year instead of every single month. And so if I were you guys, I would let them know that, hey, most clients pay annually. That way it's easier. And I think you actually get a little bit of a price break. But I would really try to push that instead of monthly. And that'll help, one, with, persistency, but two, you'll get paid more.
Yep, exactly. And I want to talk about level versus increasing for a second. So 6.5K target. So you should never do something just off of a commission, right? That's a short-term success. You always want to do what's best for people. That goes without saying. But if you have a level playing field, why would you not take the higher commission? So I'm going to talk about level versus increasing for a second. So I don't know if you guys know the actual definition between the two, but this is on the state test. This is what's in writing and in the insurance contracts or the insurance laws. Level, you only get the death benefit when you die, period. Increasing, you get both the death benefit and the cash value when you die. Being that you get both, people think that it's always better when that's not necessarily the case, which, by the way, you don't add these two columns together. I'm now illustrating an increasing death benefit. I don't add these two together. The net death benefit, believe it or not, is the net death benefit. That's the amount that I get. So comparing apples to apples, as far as the premium and client age and everything, the client started out with $262,000 of death benefit day one with level. Most people get IULs for the cash value, right? Sure, great selling point. But at the same time, if they get sick, have living benefits, or die, they're not going to be upset that they had more death benefits starting out. Their income with level was $25,000. Their income with increasing was almost $27,000. So there's one advantage. I get almost $2,000 more a year. There's one advantage. My target premium on increasing is $840. My target premium on level was $2,275. So in my opinion, right now, actually, this isn't my opinion, this is factual. The only advantage to using increasing is that the income is higher by a little bit of amount. Let's take this a step further. I illustrated the death benefit leveling off at age 66. This is what happens when an increasing death benefit. Every year that your policy's cash value grows, that's the amount that gets thrown onto the death benefit. If I forget to level off the death benefit, my cost of insurance is going to continuously increase. By the way, none of this happens on its own. Some agents and some clients think that this is just going to happen after issue on its own. You have to remember to level off that death benefit. Who in 30 years is going to remember that? Not many people. By forgetting to do it, their income is now only $21,000. So I'm a fan of setting it and forgetting it, getting the client higher death benefit. And again, I say this last because you should never do something just off of a commission, but you also get paid more by doing level. And again, it's not a one size fits all. That's why we have both. But that is the reason why I choose level over increasing in a lot of scenarios, or in many scenarios, I should say. Any questions or anything so far? I can even show you guys when lump sums are and are not a good idea. I can show you guys different solves. What do you guys want to see from me?
So someone said, if they're planning to leverage the cash value over their lifetime, would you recommend B versus A?
Yeah, so it just depends. It just depends, right? Generally speaking, anybody mid-30s and older, I'm a fan of level. Anybody 20s and younger, I would do increasing. But again, it just depends. I just showed you a 35-year-old female, and the income isn't much different, but the death benefit's a lot higher for them. So it's always a case-by-case scenario, but I would say 70% of scenarios after age 30s, I would recommend level.
And if you guys are curious with like certain examples, just go on here and go from level to increasing and compare and see what would be best for the client.
Right. Takes 2 seconds. Just click the button and see what it does. Let's talk about lump sums for a second, okay? Because people always want to dump in money, which you can do single premium life insurance, especially with National Life Group. What we do is we put it into an account. It's called a premium deposit account. So if your clients just want to pay $100,000 one time and be done, if the full amount goes into a life insurance policy year one, it's going to MEC the policy, meaning that they'd be taxed on the cash value. You never want to MEC the policy if they're intending on using it for tax-free retirement. But what we do as a company is we take the $100,000 from the client at once and we spread it out into the policy over a certain amount of years, anywhere between 5 to 10 years usually. What that does is it spreads out the payments so the death benefit isn't too high. It avoids the MEC, and it also alleviates or doesn't allow the client to spend that money because Christmas happens, retirement happens, things happen, right? Illustrating it is kind of an extensive process, but we now have it inside the illustration system. It's right here. It's the premium deposit account calculator. So if you guys want to do single premium illustrations, that's what you would go to. Okay, let me read your question really quickly, Liana. You did an illustration who ended up in 10,000, but the first year was less than 10,000, and because of that, shed against it. So here's the thing. This life insurance is not an investment, right? It's definitely not a savings account. If I put in $10,000 inside of a policy, my cash value is going to be $10,000 day one. Why? One, there's costs associated. These are really heavy fees in the early years of the policy, and we had to pay you commission as well. So the beginning numbers aren't going to be equal to the premiums that the client are paying, which, by the way, your client gave us 10 grand. If they died the week after the policy is issued, assuming everything checked out, we're paying them hundreds of thousands of dollars. So $10,000, putting it in the first year, don't expect to have your cash value automatically be $10,000 either. So as far as commissions with lump sums, keeping it simple, you guys are commissioned off of the target premium, period, end of statement. If you guys have clients paying above that amount, you do get an excess commission. I don't want to tell you the exact percent. You guys could find out from corporate or commissions, but you guys do get excess commission of the difference. So if I put in $10,000 year one of this policy as a client, as an agent, I'm getting commission off of this amount. And the difference of the 2274 and 10 grand, I do get excess commission on. But keeping it simple, you guys get paid off of target premium. So let's look at a lump sum scenario, okay? So this client has income of about, let's say, $25,000, right? Let's say that they want to throw in some money. They want to throw in $5,000. I put in $5,000. I go to quick view. My income goes from 23,000 to 28,000. So in this case, a lump sum is good. Let's say that they want to put in like $100,000. I'm only paying $300 a month. The closer your lump sum is to the ongoing premiums, the better it's going to be for the policy. So if I put in $100,000, the system's trying to avoid the MEC, right? I have to increase the death benefit so high to avoid the MEC, and now the policy is going to lapse. I put in $100,000, I'm only paying $300 a month. That is not a good opportunity for a lump sum. I'd maybe place that money inside of an annuity, or maybe only put 5, 10 grand. But just like Hayden said, using increasing in level, just play with it. Find that sweet spot for that lump sum so you know what amount to put into the policy. Good question so far. What else you guys got? Even if it's something that we haven't discussed yet. I don't want to make the assumption that you guys are gonna want to hear what I'm gonna say. So any scenarios you want to see? You guys want to talk about the living benefits and details? What can I do to help you guys? What would you want to hear?
Is it true, Devin, that you guys do have living benefits in California, right?
Yeah. All 50 states, even New York. And it's one thing to say you have them, but let's look at the maximums and the minimum and everything too, right? So yeah, even our term policies have the living benefits, and in New York, if you were to think about it for a second, so we go up to $1.5 million in death benefit for living benefits. A lot of other carriers only go up to $250,000. So even though they might have them, you'd have to look under the hood of the car and also just compare us to them.
Right. Christian asks, explain more about lump sum and how you can still max the cash value when doing that.
Yeah, so that's basically what I was showing, right? So this policy is $300 a month, paying $300 a month. their cash value, let's just pick a number. Let's pick age 60, okay? At age 60, their cash value is $185,000. Let's say they want to put in more money. By me putting in $5,000, just as an example, I have more money going into the policy early on, which gives me more compounding interest. So at age 60, my cash value goes from 185 up to $206,000 now. So I'm maximizing the cash value because I have more money put on early into the policy. And now that snowball, picture a snowball rolling down a hill, right? That's basically the cash value growing inside of an IUL. If I was just paying $300 a month, that snowball's a little bit smaller. By putting in $5,000, I made that snowball a little bit bigger at the top of the hill. So as it rolls down, it's going to get bigger and bigger.
Makes sense.
Yep. Yeah, so right, you would play with the illustration system, but of course, I literally put in $100,000 already, and you saw that the policy lapsed. If I was paying $50,000 a year, $100,000 lump sum wouldn't be anything, wouldn't be harmful, but it would be because you're only paying a little amount after that $100,000. The takeaways I want you guys to get from our session today, I know we jumped in a million different directions. We issue business fast. We have instant approvals up to $3 million up to age 40. That's really, really competitive in the industry, and we have the best product at the end of the day. Instant approvals means quicker commissions for you guys, which means quicker business that you can issue and more families that you can help, right? So when it comes to compensation, National Life Group has the sweet spot figured out because we have the best products and we have that matter of ease of doing business. I use this analogy. If I'm really hungry and I stole this from Mark Cuban off of Shark Tank, I would rather have 80% of a watermelon instead of 100% of a grape. And what does that mean? If you think about doing business with us, you're going to have your policies issued quickly, which means that you can go help more families at the end of the day too. So without getting into any further compensation discussions or anything like that, that's kind of how I would leave that conversation. But also having the peace of mind that our product really is the best in the IUL industry, and our numbers and our records and everything show for it at the end of the day. And again, I don't want to talk past the close or talk for just the sake of talking, but anything else that you guys might have. I have an extra 15 minutes as well, but if not, I appreciate you guys coming. Happy to come on and do another session as well. I will be in Vegas as well, so make sure you guys come say hi to me. But before we close out, is there anything that you guys have for me? Questions or comments or anything at all? Chat, let's see. So when you have policy questions, I can go through the app. Which tab? I haven't used the app. So policy questions. As far as the app's where you would communicate for your new business, look at your commissions, communicate with underwriters or case managers, X, Y, and Z. For policy questions and product questions, I would definitely go to the pre-sale desk. So again, this is the sales desk, pre-sale information. So if you have questions on illustrations, being stuck with product stuff, things like that, they're your help. But when a policy is through the approval process, yes, you're going to stay within the app and the website. Do not call in, and do not email. Definitely stay within the portal. And again, if it's unbearable and you guys feel like you're just lost or stumped, get with Hayden, then Hayden can get with me, and I have my underwriters on speed dial, basically. Great question, Angie. So how can clients access their cash accumulation? You can access the cash inside of your IUL in one of two ways. You can do it by a withdrawal, and you can do it via loan. I'll talk about what both of those would consist of. If I take out a withdrawal of my policy, that money I take out does not participate in the index. If you take it out via loan, that money does still participate in the index. And what do I mean by that? So you have these two columns right here, accumulated value and surrender value. Surrender value is what I would say is your piggy bank or your savings account, whatever the case may be. That's your actual cash value amount. Accumulated value is simply the money that you're earning interest off of. That's it. That's why you see that whenever the client's taking out loans, their cash surrender value decreases, but their accumulated value continuously increases. And the reason why, the client in this illustration is taking out money via loans, and they're using the variable loan option. So the money I'm taking out of my IUL still earns interest inside of the index, which is an extremely powerful feature of the IUL. But simply put, you access your cash value either by withdrawing it out of the cash value or taking out of a loan. And most people do choose that loan option because of the way it works.
Got it. And then Devin, I think it was you on a call. You talked about, if you did get sick or injured and how it could potentially be a better situation to take a loan, I think you said, instead of using like the living benefits. Can you talk about that?
Yeah, I'd have to remember when that was, but generally speaking, you'd more than likely access the living benefits because it's part of the death benefit. And it's just a little bit, I'd say, cleaner, and your clients would get more money as well. As far as living benefits go, people ask, what's the percent? There is no set percent, but we actually allow you to look at it inside of the illustration system. But generally speaking, if not potentially always, I would recommend taking out the living benefits instead of a loan when you have those critical illnesses or critical injuries.
Got it. And I know you guys have you guys have like an Alzheimer's illness rider and like all these things. Besides just the common, critical, chronic, and terminal illness riders, what else do you guys have in the IUL?
Yeah, you said it. So we have the terminal illness, chronic illness, critical illness, and critical injury. So terminal illness is 24 months or less to live. Chronic illness is similar to long-term care, but it's not legally the same. And these are all the critical illnesses and injuries. We have Alzheimer's, as you just said, and we also have a fertility journey rider. So the fertility journey rider is not an accelerated benefit rider because it doesn't come off of the death benefit or anything. But if you're unable to conceive, we actually give you 3 months of your minimum monthly premium credited to your cash value. So that's the other unique rider we have, is the fertility journey rider.
Oh, cool. Okay. And the critical injury, or I think that's what you said. What does that entail? Is that like a bad car crash or?
Yeah, so they're all in front of us right now, right? So it's not just I got in a car crash, but it's my cancer, heart attack, stroke, severe burns, brain injuries, all the things that oh, I'm actually not sharing that part of my screen right now. Apologies. This one right here. So this is all the critical illness and injury riders that we have. Also, we have no restrictions on firefighters or military or police officers. We, of course, ask additional questions, but agents go in and sell the severe burns riders all day. And remember, these are 100% tax-free. They're on the policy at no cost, and they're in all 50 states. So these would just scream prospects to me as an agent at the end of the day.
Oh, cool.
What age can so you're able to obtain the Alzheimer's rider for as long as the product allows. So we issue policies up to age 85 on IUL and 75 on term. So your living benefits are on the policies whenever you get the coverage.
Wow, that's awesome.
Yeah.
If no one else has any questions, last question here, Devin. I think I saw an email. Maybe it hasn't been announced. Has the next trip been announced for next year's NLG contest?
Yeah, so we literally just got back from Hawaii. I did pull an all-nighter. I arrived in Dallas this morning at 8 a.m. But the next one is at Bahamas. It's pretty legit. We roll out the red carpet for these ones for you guys. You have 165,000 credits, which is 165,000 in target premium, and you qualify, and we cover everything. So I know we're going to the Bahamas together in July, but that place is so nice. You get to see it twice. That one is in the Bahamas for Conference of Champions.
Sweet.
So Kawhi, I hope I said your name right. You wouldn't necessarily want to take out the full amount of cash value inside of your IUL because the policy would lapse and then you're going to be taxed, right? I wouldn't necessarily say a percentage, but if I did, I wouldn't recommend taking out more than 90% of your cash value.
Awesome. Hey man, well, we really appreciate you getting on, and dude, we're really looking forward to doing a lot of business with you guys here in 24, and hopefully a lot of people will be going to the Bahamas twice this year and next year.
Perfect. Thank you for having me, Hayden. I really appreciate you guys, and you guys have a great day.